Uh, Good evening, guys. I hope that everyone is well. Welcome back to another lesson accounting, where we are going to be covering question bank number 1, right? So I sent you the 22 question bank. So I'd like us to have a look at that example, and then we'll have a look at the tutorial question that which you guys were given on Ulink, and then that is where we'll end our lesson today. Is that fine with everyone? And then if you guys have any questions about topics you don't understand, we will use this lesson to go over it. All right. Okay. All right. So what I'm going to do now is that we're gonna do Companies Act. ACPTY, right? But I think I'm gonna need. This. I'm gonna need a brand new document. Fine, right? So I'm not sure. Here these companies question 1, right? You given additional information, what, and then we go to what is required. Generalized outstanding, income tax expense, preference dividends, and then reasons why the item meets the definition of a liabilities, calculate issued ordinary share in rands, represent the resulting, and then calculate earnings per share. Relatively easy, right? Hi Matome, talk to me.
Yeah, the question bank we are doing, isn't it not the one the tutorial?
Yes,
The one
we are going to do 2, my brother, to make sure that you guys understand both.
Oh, hey, phela setse ke re a here mkhuti.
No, we are going to do both, right? So this one is one from 2022, which is additional content to help you guys practice and master the work itself. You understand?
All right.
Danko, right? Thank you for asking or raising your question, so that I know there were other people that are just as lost, if not further lost, but now they are found. So thank you for that, ne? Thank you. Hey. So additional information states that financial statements for the reporting period ended 31 December will probably be approved for issuing on the 28th. The income tax expense regarding the period was reliably calculated as 525,000. That's important. On the 5th of Feb, the financial director approved or gave the approval that the expense is recognized as at 31 December. Okay. So they asked us to journalize the income tax expense and the preference dividends. We'll come to the preference dividends just now. Right? On the 31st of March, we invited existing ordinary shareholders to buy 4 shares at per for this. Okay, let's actually read this. On the 31st of March 2017, ACPTY invited existing ordinary shareholders to buy a further 4 ordinary shares in AC at 7 rand 50 per share for every 5 shares held in ACPTY. The applications closed on the 30th. 2 ordinary shares that jointly own 250 shares on the 31st decided not to buy the additional shares, right? The shares which were applied for were allotted on the 31st of March, or May rather. No other shares were issued during this period. And then number 4, on the 31st of December 2017, the directors declared the preference dividends, right, of 2017, right? And it still needs to be recognized. The dividend will be paid on the 15th. So what do we need to do? We need to calculate the preference dividend and the income tax expense. So with the income tax expense, when we are generalizing, what do we need to do, guys? For those that have been paying since February, March, what do we need to do when we're generalizing, guys? It's very simple. Guys, when generalizing, what's the first thing we do, guys? When we generalize, first thing we do. Hello. Guys. Justin, Aisha, Kwezi, Kanye, Mpo, Ndivo, Mpumeti, Owetu, Miss Pele. Draw the table, yes, thank you so much, right? So when we're generalizing, the first thing we need to do is just draw the table, right? The table is gonna make things easier for us to do when we are calculating. So what is it gonna be? It's gonna be account title and narration, and then here we're gonna have debit, and then here we're gonna have credit, right? So pretty much straightforward. I see someone's trying to come. Okay. So when we need to calculate our SARS, right? What are we going to do, guys? We are going to debit income, right? Income tax expense, because we have an expense of SARS, right? We have an expense of SARS, so it's gonna be PL, right? And then what are we gonna credit? We're gonna credit SARS income. Okay, wait, let me just make it caps. SARS income tax payable, right? Which is what? SFP, right? So if this is SFP, how much is it gonna be? 525,000 here, and then it's also gonna be 525,000 here. Are we all following here, guys? Are we all good with that? Okay. So if we are done with that now, we're then going to move on to the one where we're dealing with the preference dividends. So no information is given in relation to the preference dividends declared. So where must we then find the information to know how much exactly is our preference dividends, guys? Where must we look to get our answers? Where must we look to get our answers, guys, to calculate our preference dividend? Hi Khotatso Manamela, I hope that you are well. Yay! I think it's your network, maybe, nah? Approved and issued shares? No, Justin. Oh, no, no, no. No, Justin is too excited. Guys, you see, Justin, when you go to Bram, this is what happens. You understand, Justin? No, I'm joking. Justin, don't cry. Don't cry, né? Guys, I'm saying if no information is given, the trial balance, yes, the table above, and then Sisanda mentions the percentage, yes. We need to have a look at the trial balance to see how much preference shares did we actually give out, right? So it's a million preference shares, and the value of those million shares are 2 million. So when we're calculating, we're going to say what? We're gonna say 2 million times 6%, because the percentage for preference shares is given here as what? 6%. So how are we gonna generalize this now? So if you attended the contact on Friday, you would know that when you're dealing with dividends, it's basically a declaration, which is a liability. So we're gonna say preference dividends, right? Distribution SCE, right? Yes. How much is it gonna be? We'll calculate that, and then you're gonna credit shareholders for dividends, because it's a liability. This is what? SFP. How are you gonna calculate this? You're going to say 2 million, which is the value of the 1 million shares, times 6%, which is then gonna give us a figure of 120,000. This figure of 120,000, you're gonna come and debit it here, and then you're gonna come and credit it here. Is everyone fine with this, guys? Ladies and gentlemen, is everyone okay with that? If there's someone who's a bit confused or I'm moving too fast for them, please just raise your hand, ask a question, so that I can directly explain exactly what it is you're struggling with. Guys?
Remo, can you please explain that again?
So, which part? The preference dividends.
Yes.
So, the preference dividends is a liability, hence why we credit shareholders for dividends, and preference dividends affects our statement and changes in equity. When calculating for preference dividends, we need to look at the value of the shares, which is 2 million rand, times the certain percentage given, which in this context is 6%. Once you get that, you're gonna then get to a figure of 120,000. So the 120,000 is our preference dividends, which we need to then pay our preference shareholders, right? And we are declaring dividends here. It hasn't yet been paid, right? It hasn't yet been paid. So the journal entry for this would be what? Recognize declared, right? Declared preference dividends, like this. And then here also, for those that are interested, we're gonna say recognize the income tax expense for 20.7. or 27 like this. Are you now understanding, Tekiso? Is all well?
Yes, I am. Thank you.
Is there anyone else perhaps that needs me to explain exactly what we just mentioned here? Justin started an activity. What's going on, Justin? Why are you hosting using Red AI? Now you're exposing yourself, Justin. You see now. Why are you using AI now, Justin? What's going on, my son? What's wrong, Justin? You're not understanding? You don't expose yourself. What's going on? AI. Come on, Justin. You're experimenting. Wrong time, wrong place to experiment. But is everyone else okay, guys? Do we all understand what's going on? Okay. So now we are done with what question? We are done with question A. Now we're gonna move to B. Okay, there's a hand. Oh, way too high. Oh, way too. Mistake. I know she's probably panicking. Shem, it was a mistake. Oh, way too. Oh, Shem, banka. I understand. Mistakes happen. I'm joking. Now we can move, right, guys? So B, indicate with reasons why the item you credited in A2, which is this one, right, the preference dividend one, right, why it meets that definition of a liability. So they are asking why, right? They are asking why shareholders for dividends is a liability. Can someone be brave enough to try and answer? Why do you guys think it's a liability? Guys? Why do you think shareholders for dividends is a liability? We spoke about this in the recorded lessons, and also we spoke about this in Friday's contact class. Why is it a liability, guys? We have not yet made the payments to the shareholders. Yes, thank you so much, Mpumit. That's absolutely correct. So, definition, right, of a liability, what are we going to say? It is a present legal, right, obligation, right, of the entity, right, that results from a past event. A present legal obligation of the entity to transfer, right, to transfer economic resources, right, that result from a past event, right, and then you then also state of which the settlement, right, of which the settlement uh, usually entails an outflow of cash, right? So what is the definition of a liability? A present legal obligation of the entity to transfer economic resources that result from a past event, which then usually result from a settlement, which entails the outflow of cash, because you probably need to pay someone usually, right? So in this context, who do we need to pay? The shareholders. So what are we going to say to justify? In terms of the Companies Act, right? Companies Act of 2008, right? A legal obligation is created to a company, right? To a company with the declaration of a dividend, right? Why? The past event is the declaration of the dividends in itself is a event that happened, right, and it was made by the directors of ABC. Is it ABC? Or no, it's ACPTY Ltd. And then lastly, the settlement, right, of the dividend obligation in respect to the percentage, because why? We are dealing with preference shares, right? So with preference shares, there's percentages, right? The percentage of shareholders will entail in the outflow of cash in future, as payment needs to be done on the 15th of January 20.8. Right? So maybe I can just separate these to make it easier. Right? Are you guys all following, guys? Is everyone fine with this? Can you just kindly unmute yourselves, guys, and speak? Is everyone okay with this? Ladies and gentlemen? Is everyone fine with this, guys? Are we all following? All on the same page? Please just give me a thumbs up. Okay, that's good, right? So if we are all okay, we then move on to C, which is calculate the issued ordinary share capital in rands of AC as at 1 January 2017. So they want us to calculate how many shares were in issue at the beginning of the year. What information do we have, guys? Right? What information do we have? Let's see. We are told that this is at the end of the year. We are given 2 million, right? 2,050,000 ordinary shares, and they are worth 8,500,000. So that is what we have at the end of the year. So what do you guys think was at the beginning of the year? Who here would like to try and calculate? Guys, who here would like to try and calculate? This is somewhat complicated to some extent, right? So I need you guys to try to take your time here. We are told how many shares were given at the end of the year, but we don't know how many shares we had at the beginning of the year. How do you think we can calculate that, guys?
Sir,
Talk to me.
so from what I understand, I'm usually like that's the amount of shares and the in terms of like cents, and that's the in terms of rents. So basically, what I'm trying to say is that the answer to solving that is like on statement number 3 there. I'm usually told us that during the year there's been an amount of ordinary shares that was issued.
Yes.
But then there's a mistake then the typing, I think, because like it's like 4. But then on the thing that they uploaded on our Moodle, it says 800,000.
What mistake? No. What Moodle? Is this not the same activity, my brother? Here there's no mistake. This is another one on Moodle. This one. It's a different one.
No, I'm pretty sure.
Is it the same one?
Yeah, more I'm sure it says existing ordinary shareholders to buy a further 4 ordinary shares. It should say further 800,000 shares.
No, my brother. Thing is, yes, the figure is correct, but like, thing is, you're taking long dry now. So Justin, I have a question for you. If you have to calculate based on the wrong information we have here, because you can still get to the right information.
Oh yeah, you can still.
Yes, based with the wrong information we have here, how do you know how many shares were issued at the beginning of the year?
You would go scroll down.
Okay.
I'm sure it says 4 ordinary shares, so you'd multiply that 4 times 750. So that's the amount of shares issued during the year.
4
then you
times, but now, okay, I understand where you, okay, wait. I see the mistake you are trying to raise.
You get it,
Yes,
then you'd minus from that thing, yeah.
Sharp. But now, let's assume that there was no mistake, because even with the mistake, it can still be calculated correctly.
Yeah.
Guys, how we can calculate for the number of shares we had at the beginning of the year is that we can take the final distribution in respect of the previous year, which is 2016, right? So we're going to say what? You're going to say 275,000 divided by 0.22. That is going to give you the number of shares that were in issue at the end of 2016, which will make it the number of shares that were in issue at the beginning of the year. Because what's at the end of 2016 will be what is at the beginning of 2017. What do I mean by this, ladies and gentlemen? So we are going to come here and state, right? We are going to say 275,000 Rand divided by 0.22. This is going to give us a figure of 1,250,000 shares, right? So if we have this, ne, what else do we have? There's another information is given. We know that at the end of the year we have 2,050,000 shares. So what are we gonna do? We're then going to say 2,050,000 shares, which is at the end, minus what we initially had at the beginning of the year, which is the 1,250,000, is then going to give us a figure of how much? This is going to give us a figure of the 800,000 shares. So these 800,000 shares were in issue during the year, because this was at the beginning and then this was at the end. So if we have 800 issued during the year, we need to know the value of those 800 shares that were in issue at the during the year. The value they tell us it's 7 Rand 50 cents, which means that the value of this shares issued during the year will then be a figure of 6 million. Are we all understanding what I just said? This one is bigger than us. This one is bigger than the economy. It's bigger than everyone. Give him a round of applause. Yes. Justin,
Please repeat.
Yo, round of applause. I want you please repeat. So, Justin, what am I repeating you if you understand? You see your brain is cooked now. Guys, for those that don't understand, let me take it again step by step. When you want to calculate the number of shares that were in issue at the beginning of the year, you are going to take this figure, right? You are going to take the figure of the final distribution in respect to 2016. Why? Ne? Let me say, the number of shares at the end of 2016 will be the number of shares at the beginning of 2017. So when you say the value of the dividends that were declared, final distribution is 275,000, you're going to divide that amount by the percentage, which is 22%, to actually get the value, right? The number of the shares that were in issue at the end of the year, which is 1,250,000, right? So what was in issue at the end of 2016, which is 1,250,000, will be in issue at the beginning of 2017. Can we all agree there? Can we all agree, Justin Boitumelo? So what was in issue at the end of 2016 will be in issue at the beginning of 2016. Okay. Now that we have the value of shares, you are then going to minus the number of shares we had at the end of 2017, which is 2,050,000, minus what we initially had at the beginning, which is 1,250,000, which then gives us a figure of 800,000. This 800,000 shares were shares that were issued during the year. At what price? At 7 Rand 50. So if they were issued at 7 Rand 50, how much are the value of those shares? We then going to get a figure of 6 million. Are we all following, Bazalwan?
Yes.
Yes. Ladies and gentlemen, if you understand this, you are going to get a distinction for your paper. I am telling you for free.
I receive.
Hallelujah. And it's a Sunday. Some people went to church today. Hallelujah. And then those that went to church which is in their heart, We know you as well. Hallelujah to you, Bazalwan. Oh my gosh, I don't need to go to church. Church lives within me. Yes, correct. Wow. Revelation. Right. Everyone is good? Okay, now let me ask one by one. Did you go to church, Remo? That's a very good question. You see you. You see you. Good question. Good question. So as I was saying, ladies and gentlemen, right away too. Do you understand the work, Bazalwan? No, guys, I'm joking. I did go to church. I did. Did or did not? Ish, fal. You know, English home language. It's not my mother. It's not my mother's tongue. You know, mother tongue. I don't know. Oh, sure. Ladies and gentlemen, are we all okay? Sisanda, Susiso, Nomhle, Tekiso, Togozani, Tabang, Letabile. Taishi. Tabang, Letabile. Tabang Utabile. Oh, hey. Good. So, now that we are done with that, what do we then need to do? We are doing D now, which is present the resulting balances, right? In the statement of changes in equity. So this should be pretty much straightforward. Statement of changes in equity, we just need the format, which I assume at this stage of the game everyone knows, but if they don't, oh, bad boy. So I think how many columns? 1, 2, 3. How many? There is the normal shares, preference, retained, total. So I think 5 will do. Yeah, 5. So 5 columns. And then going down, we can have as many here going down. Okay, so what must we have here? We're going to have our ordinary share capital. Then we're gonna have 6% preference share capital. Then we're gonna have retained earnings. Then we're gonna have a totals column. Yeah? And then what do we have here, guys? We're gonna have the balance as at 1 January 2017. After that, we're gonna have changes in equity for 2017. Then after that, what are we going to have? Issuing of share capital. We then gonna have what? We're gonna have dividends, right? But with dividends, we have preference dividends, and then we also gonna have dividends of what? Of ordinary, right? This is just us labeling them. You should know the format by now, ladies and gentlemen. After this, we're gonna have, what are we gonna have? We're gonna have final distribution in respect of 2016, which is given, and then interim distribution in respect of 2017. Then after we have that, what are we gonna have? Profit for the year. And then what else are we gonna have? We also gonna have balance as at 31 December. So let's fill in the information we know. We know that during the year, guys, the number of shares that were in issue were how much? It was 6 million, right? Remember, we calculated that. And then at the beginning of the year, how many shares? Let's see. At the beginning of the year, how many shares? What is the value? The value
6 million.
Yeah, no, that's during the year, not at the beginning.
Oh, sorry.
Yeah, that's during the year. At the beginning, guys, how much do we have? Are we told? We are told at the end of the year that we have 8,500,000. So if at the end is 8,500,000, which is gonna be this, what is at the beginning of the year? What is this one, guys, at the beginning of the year?
2,500,000.
2,500,000, and you get to that figure by saying 8,500,000 minus 6 million gives us the 2,500,000. Fine. Then we are dealing with our 6% preference share capital. How much do we have there? There they tell us at the beginning of the year it's 2 million, so we come here and write what? 2 million. And then did we issue anything during the year? No, we didn't. We only issued what? Ordinary shares. Meaning that at the end of the year, this 2 million is still going to remain as what? 2 million. And then under our retained earnings, are we given a figure? They tell us that the retained earnings at the beginning of the year is 5,750,000. So we're gonna say 5,750,000 like this, right? And then what do we have here? Do we have preference? We have final distribution. We also have interim distribution, and we also have dividends, right? What is our dividends? Remember, we calculated our dividends to be what? 120,000, right? So this is gonna be in brackets because it reduces our retained earnings. And then do we have for interim and final dividends distribution how much? The figures are here given, 275 and 287 respectively, right? So the final distribution is gonna be 287,000. No, 275,000. And then the interim is going to be 287,000. And then our profit for the year, let's look at our information to calculate profit for the year. They tell us that our profit before tax is 1,950,000. So we're gonna come here, right? And we're gonna say open brackets 1,950,000. We need to also then calculate our tax. How much is our tax so that we can get the amount after tax? Our tax amount, they tell us it's 525. So we're gonna say minus 525, which then gives us a figure of how much? This is going to then give us a figure of 1,425,000, right? Meaning that our balance at the end of the year will be 6,493,000. Why? Because it's going to be this 5 million minus 120 minus 275 minus 287 plus 1,425,000 rands. And then once we are done with that, we then just going to add our totals column, which is the easier part. Our totals column here is going to be 10,250,000 because you are adding everything here, right? And then here it's going to be what? 6 million. And then here it's going to be 120,000. And then here it's going to be negative 275,000. And then here it's going to be negative 287,000. Then here it's going to be positive 1,425,000. Meaning that our totals column here will be 16,993,000 rands, which is this plus this plus this. Are we all on the same page, ladies and gentlemen? Ladies and gentlemen, is there anyone perhaps with a question? Confused? Are we all on par? Guys, are we all good? Okay. Now, that is amazing. What do we then need to do next? We need to calculate the earnings per share for the reporting period that ended 31 December, and then we need to show our calculations. So, remember guys, what is, how do you calculate the earnings per share? What's the formula for earnings per share? Guys?
It's a profit over number of ordinary shares issued.
Profit divided by number of ordinary shares issued. So what's our profit here? Our profit is going to be 1,425,000 divided by what? It's going to be divided by the number of ordinary shares issued, and the number of ordinary shares issued is going to be how much? It's going to be the 1,250,000 that was issued during the year, plus, right, plus the 800,000, plus the 800,000 that was issued during the year. Yes, so it's gonna be 800,000 that was issued during the year. The problem with this 800,000, guys, is that it's going to be times 7/12, right? Why is it 7/12? It's because the shares were not issued for the whole year. When were the shares issued? The shares were issued 31 May. So it's gonna be June, July, August, September, October, November, December, which is 7/12, right? And then once we have that, we then going to get a figure of what? Let me just calculate here. 1,425,000 divided by 1,250,000 plus open bracket 800,000 times 7/12. We are then going to get a figure of 0.83 cents. Are we all understanding how we got to this calculation, ladies and gentlemen? Ladies and gentlemen, are we all understanding? Are we all sure, guys? Because if that's the case, it means that we are done with this activity, and if we are done with this activity, then you should understand what's going on.
Can you please explain EPS again?
So the calculation to the formula to calculate earnings per share will be our profit divided by the number of ordinary shares issued. How much is our profit? 1,425,000 divided by the number of shares that were issued during the year, which is the 1,250,000 at the beginning, plus the 800,000 shares that were issued during the year, times 7/12, because they were only issued in May 31, remember. So we're only going to factor June, July, August, September, October, November, December. Once you can punch all of this in your calculator, it's then going to give you a figure of 0.83 cents. Are you following, Tekiso?
Yes, I am. Thank you.
Pleasure is all mine. So if that's the case, guys, and everyone is fine with that, are you guys now ready to move on to the next activity? Okay, good. So let me stop recording this lesson and we will continue with the next tutorial question after this, right? For those that are interested in becoming paying members, please private message us via WhatsApp at 066-217-6693. But you guys are surprised because you guys think you guys are paying members. Yay. Okay, bye guys.